Welcome to CT Talks with Premier Brains. We are back again with another episode of knowledge sharing Q&A session on UAE Corporate Tax. In today's episode, we'll be continuing the concept of the taxation of the free zone person under UAE Corporate Tax. In the previous episode of the free zone taxation, we had discussed about the topics of a qualifying free zone person, qualifying income, and excluded activities. In today's episode, we'll be covering the concepts of immovable properties tax treatment, the permanent establishment of a qualifying free zone and its tax treatment, the DMinimize rules, and the registration and filing procedures of a free zone person. So now, my first question to you is, what are immovable properties and what is the tax treatment of the income derived from them?
So before we start delving into the topics of today's episode, I just want to mention that in our last episode, we discussed that there was a public consultation document which was issued by the UAE Ministry of Finance on the qualifying activities and the excluded activities, basically inviting feedback from the various stakeholders on their comments on the public consultation. So that public consultation was open till 9th of August. So currently, as of today, the no feedback has been announced yet by the Ministry of Finance based on the comments which they received from the stakeholders. So this is just a background on where we stand in terms of the public consultation document. So now answering your question, Ashir, on the immovable properties and what is the tax treatment. So basically, immovable property is any property which is fixed or settled to a place and which cannot be moved until and unless it is altered or deteriorated. So this definition of immovable property is basically taken from the UAE civil transactions law, because there is no separate definition as such in the corporate tax for the immovable property. So immovable property can be a commercial property or a non-commercial property, and the tax treatments will differ also based on the nature of transactions. So commercial property has been defined in the corporate tax law, which says that which is any immovable property which is exclusively used for business or business activity, and which is not used as a place of residence or accommodation, including hotels, motels, or serviced apartments. So now coming to the specific tax treatments. So any commercial property which is located in a free zone, and if the transactions is with other free zone persons, then that would be considered as a qualifying income. However, if the immovable property income is derived from a property which is located outside the free zone, that will be considered as an excluded activity. So the important point here to note is that in case of commercial property, only the income which is earned from transactions with other free zone persons would qualify for a beneficial rate. However, if those transactions non-free zone persons or mainland companies or natural persons, then that would not be qualifying for a beneficial rate, and then that would be subject to the 9% corporate tax rate.
Okay. So the next question is, what is the tax treatment of domestic or foreign permanent establishment of a free zone person?
Okay, so if a qualifying free zone person carries out transactions or business outside the free zone, which gives rise to a permanent establishment, which can be a branch. So in that case, that income which is attributable to that permanent establishment will be subject to the 9% tax rate. And the permanent establishment can arise if a qualifying free zone person has a fixed or permanent place of business outside the free zone from where it is carrying out the business activity, or if there is any person which is there outside the free zone who's conducting the business on behalf of the free zone person, the qualifying free zone person, then that can give rise to the permanent establishment. And the permanent establishment case, if income and expenses will need to be attributed to that permanent establishment based on internationally acceptable allocation methods. And another important thing which the taxpayers have to note is that if there are any transactions between a qualifying free zone person and that permanent establishment, so even the arm's length principle will need to be tested for those transactions as if they were separate entities. So this is an important thing which needs to be considered for the permanent establishment taxation.
Okay. So the next question is, what are the de minimis requirements?
Okay, so the de minimis requirements say that if a qualifying free zone person has revenues from non-qualifying transactions, and if those revenues do not exceed 5 million dirhams or 5% of the total revenues, whichever is lower, then even the non-qualifying revenues can take benefit from the 0% tax rate. So this is what the de minimis rules say. Important point to note here is that so any revenues earned from transactions which are done by the permanent establishment, the domestic or the foreign permanent establishment, and also the revenues earned from the properties which are located in the free zone, which do not benefit from the 0% rate. That is, we just discussed that if any transactions with non-free zone person with respect to the commercial property, or transaction with any person with respect to a non-commercial property, then those revenues will need to be excluded for the calculation of the de minimis rules, because they are subject to the standard corporate tax regime.
So, can a qualifying free zone person benefit from the 375,000 CT band rate related to the income that is subject to corporate tax?
Okay, so unfortunately not. So a qualifying free zone person cannot take the benefit of the 375,000 zero band rate. However, if a free zone person does not qualify to be a qualifying free zone person, then such a person can take the 375K zero band rate benefit.
Okay. So, what can this qualifying free zone person be a part of a tax group as well?
No, actually, qualifying free zone person cannot be part of the tax group or even a qualifying group. In fact, the qualifying free zone person cannot take the benefit of transferring or receiving tax losses, or even taking the small business relief or any the business restructuring relief.
Now, the crucial point. So, what would be the registration and filing procedures for a qualifying free zone person?
Okay, so basically any free zone person will need to register for corporate tax and file the corporate tax return. So if a qualifying free zone person has a domestic or a foreign permanent establishment, then they need not do a separate registration. So basically a qualifying free zone person only will do the registration, file the return, and report the taxable income of that permanent establishment in its return. So similarly, if there is a free zone branch of a mainland company, then that free zone branch need not register separately. Basically, the mainland company will register itself for corporate tax, file its return, and within its return, it will include the income of the free zone branch. It needs to be reported accordingly in the return.
Okay. So I guess that's all it, and that brings us to an end to today's episode. I hope Ms. Bhavna, shared really thoughtful insight into the concept of the taxation of the free zone person, and we'll be back again with another episode and covering another related topic, corporate tax. Thank you.
Thank you so much.